Hello everyone, I'm Vikram Chandra and this is the India Story, the show where we take a look at India's rise from developing to developed to India's position of leadership as the growth engine of the world. And this week we're going to be taking another look at the question that has arisen over the last fortnight or so over one aspect of the India story in Parliament and in investment quarters, the row over the Adani Group and whether it should affect investment decisions into India. Today, we are going to focus on two crucial questions. One, now that the initial phase of the crisis has subsided, how is the Adani Group fighting back and where does it stand now that the dust seems to be settling a little bit? And number two, what impact, if any, is all of this going to have on the India story itself, on Indian markets, on India's growth, on India's place in the world? We're shortly going to be speaking to one of the best, the most well-regarded and one of the most credible voices on the Indian markets, the Managing Director of the Kotak Mutual Fund, Nilesh Shah, who's also advises at the Prime Minister's Economic Advisory Council. But before we continue, let's just take a quick look at some of the top stories in India right now that you should be tracking.
The Reserve Bank of India hikes the key repo rate by 25 basis points to 6.5%. This is the sixth rate hike by the central bank since May 2022. The smaller rate hike can be attributed to moderating inflation in India. A report in the Washington Post says that China has operated a fleet of spy balloons targeting several countries, including India. This comes days after the US military shot down a Chinese surveillance craft floating over sensitive installations in the country. The Taiwanese government and manufacturing giant Foxconn are reportedly in talks to upgrade the skills of Indian workers to meet the tech industry's needs. This plan would use Taiwan education centers across India to train local workers with Foxconn's proprietary material. Foxconn is the largest supplier of iPhones and iPads for Apple and is betting big on the semiconductor market in India.
Well, I'm sure you've heard of the Adani saga by now. Wherever in the world you are, you must have heard about it. Last week on This World, I recapped the length and the breadth of this unprecedented crisis for one of India's largest conglomerates. But here's a quick gist. A short-selling firm known as Hindenburg Research released a report a couple of weeks back accusing the Adani Group of what it called brazen stock manipulation and accounting fraud. In response, the Adani Group had branded the report maliciously mischievous, a massive 400-page rebuttal. But the effect that this had on Adani stocks, however, was massive. Billions of dollars in valuation were wiped out. It was nothing short of a bloodbath. It caused havoc with the company's follow-on public offering, or FPO, which the company eventually withdrew, even though it was fully subscribed, with Gautam Adani saying that he felt it would be not morally correct to proceed, considering the volatility of the market. Now, a week later, some of the dust seems to be settling, specifically when it comes to the stock markets. Adani stocks have recovered, in fact, recovered quite dramatically over the last couple of days. They're still a long distance away from the pre-Hindenburg peak. But the real question many are going to be asking now is the worst over? Now, I'm just going to take a look. This is what happened today. Just today, for example, Adani Enterprises up something like 20%. Ports up very sharply. Many other Adani groups were up at the 5% circuit breaker. One or two of them are still down. Total Gas in particular continues to get beaten. But many of the other stocks have bounced back today, and they did bounce back yesterday as well. So they've recovered a lot of the ground. Now, why the bounce back? There have been at least three crucial developments over the last few days which may have contributed to some sort of a bounce back and perhaps a slightly higher amount of confidence among investors. Number one, multiple Adani companies have announced or are set to announce their earnings for Q3 of this financial year. Among them, Adani Transmission, which reported a 73% jump in consolidated net profit year-on-year. Adani Ports reported their EBITDA up 15% or thereabouts year-on-year. They also said they've got their highest ever revenue. Adani Green Energy, meanwhile, reported its third quarter net profit up about 110% over the last year. Ambuja Cement, remember this was acquired by the Adani Group just last year, also reported a pretty big 46% growth in year-on-year profit. So number one, some of the results that have come out for some of these Adani stocks have been seen positively by the market. And number two, and perhaps even more crucially, the Adani Group's promoters have actually come forward to say that they are prepaying loans and they intend to prepay other loans, which should again restore some confidence. For example, $1.1 billion just been, they've announced they're going to be repaying $1.1 billion, releasing pledged shares in 3 of the companies we've just spoken about, Adani Ports, Adani Transmission, and Adani Green Energy. These loans, by the way, were not due until September 2024, and that's why the market saw this as something which is supposed to be boosting confidence. And hey, we don't need to repay these loans right now, but guess what? We're going ahead and doing it anyway. That's how much money we have, and that's how comfortable we are. That's what the promoters did, and it seems to have worked, at least at the stock markets. It seems to have worked. And third, when it comes to the India story, India's regulators and policy makers have been rather quick to come out to try and dispel any notion of a broader systemic risk. Here, for example, is what the RBI governor had to say just this morning.
The strength, the size and the resilience of the Indian banking system is now much larger and much stronger to be affected by, an individual incident or a case like this. And the appraisal methods of Indian banks have significantly improved over the years.
So is the crisis over when it comes to the markets or for the group? But of course, it's way too early to say. There's a long way to go. Anything could happen tomorrow. Anything could happen day after. Another report could come out. But for the moment, at least when it comes to the stock markets, the selling seems to have subsided. And as a result of all of this, the action for the moment seems to have moved from the markets to the political arena and to Parliament in particular, a place where the opposition seems to believe that it has finally found what it considers a good weapon to use against the Modi government. Both the upper and the lower houses of Parliament have seen protests and disruptions by opposition parties over the issue. They also then stopped the disruptions to say, let's have a debate, because during the debate we can try and bring focus on the Adani Group. And the Adani Group is clearly one of the main areas of focus during the reply to the president's speech, where Congress leader Rahul Gandhi, for example, spoke at some length, directly linking the success of the Adani conglomerate to what Mr. Gandhi termed his close relationship with Prime Minister Modi.
केरल में, तमिलनाडु में, महाराष्ट्र, कर्नाटका, हिमाचल, कश्मीर, सब जगह अदानी 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 अदानी। दूसरा सवाल था कि ये अदानी जी हैं, ये किसी भी बिजनेस में घुस जाते हैं। पहले ये 1-2 बिजनेस करते थे, अब ये 8-10 सेक्टर्स में काम करते हैं। हम सड़क पे चल रहे हैं, मैं पूछूं किसने बनाई? अदानी जी। तो लोगों ने ये भी पूछा कि राहुल जी, ये जो अदानी जी जो हैं, इनकी सफलता कैसे हुई? ये इतने बिजनेसेस में कैसे घुस गए? इतनी सफलता कैसे प्राप्त हुई? और सबसे जरूरी सवाल, इनका हिंदुस्तान के प्रधानमंत्री के साथ क्या रिश्ता है और कैसा रिश्ता?
The BJP in turn was quick to respond, pointing to what it called the Congress party's own track record. This was a direct response from Prime Minister Modi himself. Let's listen in to what he said.
जो अहंकार में डूबे होते हैं, जो बस सब कुछ हम ही को ज्ञान है, सब हमारा ये सही है, ऐसी जो सोच में जीते हैं, उनको लगता है कि मोदी को गाली दे करके ही हमारा रास्ता निकलेगा। मोदी पर झूठे अनाप शनाप कीचड़ उछाल करके ही रास्ता निकलेगा। अब 22 साल बीत गए, वो गलतफहमी पाल करके बैठे हुए हैं। क्या ये झूठे आरोप लगाने वालों पर मुफ्त राशन प्राप्त करने वाले मेरे देश के 80 करोड़ देशवासी क्या कभी उन पर भरोसा करेंगे क्या?
So the politics is likely to continue if the flag bearer of India's growth finds itself having lost more than $100 billion in value. How does that actually affect the India story? And that's a question many of you are asking. That's a question we're going to turn our attention to. Some analysts have stated that this entire saga will cause investors to reassess the risks of the Indian markets, particularly with regard to governance and corporate transparency. But the effect on the Indian stock market so far, by the way, has been entirely muted. There's hardly been a ripple in the stock markets broadly. If you set aside the drama and Adani stocks, the rest of the market has been fairly unconcerned. And there are a couple of reasons for this. Number one, the Adani Group is still, of course, very tightly controlled by the family, and it's a rather consolidated holding across group companies. The family owns at least 72.5% of the outstanding equity, leaving a much smaller pool for investors to actually play around with. That limits the possibility of contagion. And then, of course, there are continuing to be questions asked about the Hindenburg report itself, what it means, how much if it is correct, how much is not. The accuracy of the claims have also been debated on all sides. Some people say it's correct, some people say it's not. Perhaps one of the most attempts at having a balanced or unbiased assessment, which got a lot of traction in the last few days, a blog post, the Professor of Finance Ashwath Damodaran, known as the Dean of Valuation, has said, he took a look at this entire report and where it is, and his conclusion essentially was that Hindenburg may have been indulging in some sort of hyperbole when it called Adani the biggest con in history, because according to him, the Adani Group is what he described a competent player in the infrastructure sector in India, which is otherwise, and again, I'm quoting, he said, filled with frauds and incompetence. Then there was this entire question of the large-scale institutional support for Adani. Many people have been questioning that, including in Parliament. And the entire question is there too much support coming from institutions like the life insurance company, for example, LIC? How much money has LIC put into the Adani Group companies, and does that lead to a systemic risk? But in his report, Damodaran himself said that he attributes this not to corruption, but to indifference. He said that the Indian economy remains fairly dependent on family group businesses, and Indian banks and institutions are more confident lending to family businesses. That's one take, that's what he has. Other people have come out with other assessments, such as Forbes, such as many other. Wall Street Journal had a report on it. At the same time, it's also to be noted that Mr. Damodaran, for example, did question and did say that he felt many of the group companies were overvalued. For example, he pegged Adani Enterprises at being worth half of what it currently is, especially after the recent jump that we have seen over the last couple of days. So as it stands, that seems to be the state of play. It could change dramatically in a day or two. It could change for the better, it could change for the worse, who knows. But at a time when everyone's got their eyes on this and what it means for the broader Indian markets, and I'm sure many of you in many corners of the world scratching your head and saying, hey, what does this mean? We had India as an overweight in 2022. Should we remain overweight? Should we be investing in India? There's this great India story unfolding out there. People are talking about the Indian stock market continuing to grow at maybe double-digit figures. Is that possible? The economy itself, most likely to be the fastest growing economy in the world. Where do we invest, and should we invest in India? Now, who better to speak to about all of that than someone who is probably one of the most respected voices on the entire Indian stock market? Nilesh Shah, who is, of course, Managing Director at the Kotak Mutual Fund, and he's also a part-time advisor at the Economic Advisory Council of the Prime Minister. Nilesh Bhai, it's such a pleasure always talking to you. I have always felt during the years that you are one person who's got his finger on the pulse of not just the details, but also the big picture. So let me start by asking you about the big picture. If you look at the overall situation right now, how is it? Is it looking good? Is it looking bad? Would you be investing right now? Would you be selling right now? Would you be waiting and watching? What would you tell people to do?
So we are at a stage where economy and market may move in different direction. Economy is doing well. There are three challenges which we were primarily facing. One, private investment was on the back foot. Second, consumption at the bottom of the pyramid was impacted by COVID and inflation. And third, we were running current account deficit, which was way ahead of our comfort zone. Now, over last few quarters, investment has started coming back. And in this budget, government has pushed investment to 10 lakh crore. Hopefully, this will revive private sector investment as well. Consumption was slower, undoubtedly, but with this 35,000 crore tax cuts in the budget, hopefully consumption also will get boosted. So the real challenge for India is current account deficit, where little bit of slowing growth and softer commodity prices, especially oil, may also give some respite. So economy by and large will maintain, one of the fastest growing major economic title, will grow little less than last year, undoubtedly because of the higher base. But compared to the global scenario, we are in a better shape. But markets have already discounted this. And from here onwards, markets will give moderate return, unlike equity, unlike economy, which will do reasonably well.
Okay, well, now, before we look at the future, let's just take a look at the other environment. Yes, what's happening globally, we all know. But even when it comes to the Indian markets, for the last 10 days, 15 days, all that anyone's talking about is what's happening with the Adani Group companies. That really sharp 50% drop that we saw in their market cap last week. And then, as you know, there's been this sort of consolidation, a sharp bouncing back over the last couple of days. So it's clearly a major event. How do you see that, this entire episode in Adani Group stocks? And then I would ask you about the rest of the market.
So one, in terms of business, Adani businesses are real. We have seen their port, we have seen their cement plant, we have seen their oil refinery, we have seen their transmission line. So business is real. In terms of debt to Adani Group, I think the total debt for the Adani Group is less than one telecom company's debt, which is in a much more precarious situation. So I don't think banking sector per se will have too much risk from the Adani Group debt. The real challenge is equity valuation, where we believe, the prices were always ahead of the fundamentals, and hence there was very, very limited participation by domestic investors, domestic institutional investors. Now, thanks to what has happened in last 15 days, at least some of the group companies have come into fair value zone. And when I say fair value, that doesn't mean that I will go and buy tomorrow. Because if 100 rupee thing is available at 70, but I know that there are some desperate sellers who will go and sell it at 50, then I will buy at 50 rather than at 70. Right. But at least some of the group companies are now in fair value zone, whereas some other companies, they are still above their fair value zone. And hence there will be either a time correction or price correction or both. And more importantly, Adani Group per se will have to improve their communication with investors regarding all the allegations of Hindenburg. So it will take some time where fundamentals and prices will have to converge.
So you seem to be saying that it's very similar to what's happening in other businesses. But, if you look at the Hindenburg report, for example, one of the things that they seem to be saying is that there was overvaluation of almost 85%, according to them. Now, these stocks did fall back very sharply and have then bounced back equally sharply. Are you saying that at this point it's the price and the valuation that worries you more than the quality of the businesses? Is that, am I understanding you correct in that?
Absolutely. I mean, we'll be buyer of stocks which are below fair value or around fair value. It's difficult to give above fair value price and hope to make money. So we wait for correction, and generally one reason or other catalyst does provide that correction.
The other question, I guess, and this is particularly relevant for the broader markets, is to come back to the overall theme. I've been reading some reports. People are questioning, how do you short Indian banks without actually being there? Somebody should do the research on this. Question many people around the world are asking is, how much exposure does the general system have to this? How much exposure do Indian banks have for this? Is there a systemic crisis if something goes wrong? Who are the people who could be exposed to this? Who are the people who are not exposed? Have you done that analysis? Is there a high level of exposure elsewhere to something that could still go wrong in the Adani Group? Or are you feeling, no, systemically things are okay, like what the RBI governor said?
So I don't think so. There is risk of contagion. People who have exposure Those bank chairmen have spoken. Independent analysts have also spoken. And overall, there is a far larger exposure to Adani Group from global lenders than local lenders. And more importantly, this exposure is backed by solid assets on the ground. So I don't think so there is any fear of contagion on the Indian bank's balance sheet. Anyway, their NPA levels are at decadal low level, and they are witnessing a Cinderella time where the NPAs are really, really low and fully provided for. So there is no risk of contagion on the Indian banking balance sheet.
All right, Nilesh Shah, so overall you're very bullish on the economy, but you feel that the Indian stock markets may not necessarily outperform at the level that they have been in the past. Thank you so much for joining us with that perspective.
Thank you.
Okay, we turn now to the situation in Turkey and Syria, where a string of devastating earthquakes have created havoc. They've claimed about 10,000 lives and left thousands more trapped and injured. This is the worst earthquake that Turkey has seen in over a century, and countries across the world have joined hands to provide humanitarian aid to the nation. India, of course, being among them under Operation Dost. In fact, Prime Minister Modi, while offering his condolences to the people of Turkey, even became emotional while remembering what had happened in Kutch in 2001, an earthquake that killed close to 20,000 people. So, despite having bilateral ties that have seen several ups and downs in the past few years, perhaps more downs than ups, India has resolved to assist Turkey in every way possible. This assistance includes 4 C-17 plane loads carrying more than 108 tons of relief material already, more than 100 National Disaster Response Force personnel, along with equipment, vehicles and dog squads to aid in search and rescue operations have been sent. 99 medical specialists have been sent to set up a 30-bed medical facility with X-ray machines, ventilators, operation theatres, ambulances and medicines. What becomes interesting, though, and this is a little historical aside that I'm going to try and bring to you today and frequently on the India Story, is a historical insight that this actually isn't the first time that India has come to Turkey's rescue. In fact, the two nations share a rather long-standing history that goes all the way back. And then, in 1912, at the height of the First Balkan War, when India was also in the middle of its struggle against Western imperialism, Maulana Shaukat Ali, an Indian freedom fighter, led a medical mission in the war-torn Ottoman Empire for more than 6 months. The goal of this mission was to help wounded soldiers of war. In 1920, India extended its support to Turkey in its war of independence and the formation of the Turkish Republic by way of sending them funds. Mahatma Gandhi himself spoke out against the injustices faced by the nation after the end of the First World War. The relationship between the two nations has been a long-standing one and among the scenes of destruction and loss, and it's clearly going to take a long time for Turkey to get over the ravages of the catastrophe. It is obviously important for India to help, and it's important to keep remembering the ancient ties and relationships which many of these countries have had with India and, of course, with each other. And in this time, I have to say, Turkey has also thanked India and called it a dost or a friend in need, saying that India has been a friend in times of need, which is, I guess, what the philosophy always should be, to see the world as one and to show up for those who need it. And that's it for tonight on the India Story. I'm Vikram Chandra. We'll be back again next week, tracking India's biggest stories and taking them to the world.